Thank you very much. Let me start by thanking the organizers of the conference for inviting the IMF to this very important and timely event. I'm really delighted to be here among so many distinguished colleagues to discuss the AML-CFT compliance. The IMF really attaches great importance to the AML-CFT issues. As many of you just attended the IMF annual meetings, and this topic has been really one of the main topics of the annual meetings. In fact, the IMFC communique, which was published yesterday, highlights few areas that further work needs to be done. As you know, IMFC communique really reflects the membership's views and intention for the future direction of IMF work. In particular, the communiques calls for further work to address shadow banking, tax evasion, and also calls for transparency of beneficial ownership and other legal arrangements. So today I will focus my intervention just on 3 issues. First is on the role of IMF in the AML-CFT, and second, I will briefly discuss the FATF revised standards, but particularly what the standards mean for banks. And finally, I will touch upon the challenges facing the private sector, in particular the costs and benefits of an effective AML-CFT regime. I have to apologize for my voice. Despite the beautiful weather, I managed to get a cold. So at the IMF, we view financial integrity as really a key component of economic and financial stability, which is really at the heart of our institution's mandate. The money laundering and financing of terrorism and predicate crimes generate financial flows, which may undermine the economic growth and increase the volatility of international capital flows. So just think about the different types of criminal activities, what type of impact they already had on a number of countries, ranging from Afghanistan with a very high level of proceeds from drug trade, to Cyprus, where the weaknesses in the AML-CFT regime may have contributed to the attractiveness and also unsustainable growth of its financial sector. To Greece, where the tax evasion really has undermined the financial and fiscal stability of the country. So AML-CFT controls, when effectively implemented, can really mitigate the adverse effects of the criminal economic activities and promote the stability and also integrity in the financial markets. It is really for this reason that for over decades now, the IMF have been engaged in working with our member countries as well as the FATF and FATF-style regional bodies such as MENA FATF, the World Bank, and United Nations to strengthen the financial integrity globally. At the fund, we do so through a number of ways. For those of you who are not very familiar with IMF, we basically have like 4 activities, main activities. First is through our annual surveillance consultation with our 188 members. We usually do it on a yearly basis and sometimes actually more than yearly. We address the AML-CFT issues when they may have impact on a country's domestic stability or balance of payment stability, or they have an impact on international monetary system. Second is through our so-called conditionality, and I'm sure many of you have heard of our conditionality for our lending. So whenever we lend to a country to support their adjustment programs, we may establish a conditionality on strengthening a country's AML-CFT regime in order to improve the country's stability framework, also safeguard our resources. At the end of the day, we want the country to repay us. The third is through our assessment program. So where we basically assess a country's compliance with FATF standard. And finally, through our capacity development activities, we have been providing technical assistance to many MENA region countries in terms of helping the country draft legislation, or help the country improve the effectiveness of FIUs, or help the countries develop a national AML-CFT strategy. And also, we have been partnering with MINIFADF and also local authorities in providing training courses to the country. So I think previous speakers already touched upon the revised FATF standards. I only want to highlight three things. First, the risk-based approach is really the central element of the revised standard of 2012. The application of risk-based approach really requires assessment of risks. That means countries and financial institutions must understand, identify, and assess the risks, and apply mitigating measures to address those risks. In other words, where the risk is greater, additional measures should be taken. But where the risk is lower, a lighter touch will be appropriate. The second thing I want to stress is that central to the new assessment process is the notion of effectiveness. So the extent to which the countries are able to mitigate all these risks and also related criminal activities will be a primary focus of the new round of AML-CFT assessments, which has just recently started. The third point I want to emphasize is that all the AML-CFT risks must have high quality and must comply with standards. Why I'm saying that? This is very important because we need to treat all the countries uniformly, at least from IMF perspective. And also, it is particularly important for our work because the findings of the AML-CFT assessment will feed into our other areas of work, such as surveillance. So when we assess a country's financial stability or their macroeconomic framework, we will draw from the findings of AML-CFT assessments. This is regardless of whether the assessment is conducted by the IMF or by another assessor body. Regardless of that, we take that into account. As you may know, the first mutual evaluation reports for Spain and Norway, they're the two so-called guinea pigs for the new standards. They will be actually discussed next week at the FATF plenary. This report should include a lot more information about the assessed country's risk and context, and as well as the effectiveness of their AML and CFT regimes. We hope this information will really help the financial institutions to better understand and assess the risks of their products and their customers that have a link to the assessed countries. As you know, a number of the new standards are quite relevant to banks. For example, a Reg 13 relates to the correspondent relationship, and the Reg 35 relates to the sanctions. So these new standards will have potential repercussions for financial institutions, for the banks. Just to name a few on the screen, the termination of correspondent relationship will lead to higher costs for conducting business for banks. And enhanced due diligence may be required for certain transactions or institutions for high-risk countries. And needless to say, as we have already witnessed in the recent examples like AHBC or BNP or Arab Bank, criminal, administrative, or civil sanctions can be imposed against financial institutions for non-compliance. So this is really a serious matter. So at the fund, we really appreciate the important role that the private sector, in particular banks, are playing in the global effort to address the AML-CFT risks. We try to really better understand the challenges you're facing so that it will help us to assist our member countries to address the overall framework. The following are some of the challenges that we observe. By no means this exclusive list. I'm sure you can add a lot of challenges to this list. The first one is that the compliance by the countries with standard is still quite low. Forget about new standard or the old standard. Of the 142 countries assessed using the methodology from 2004 and 2011, full compliance with any principle was very rare. The full compliance only occurs in 12.9% of cases with any principle. And the second layer of compliance, which is called largely compliant, that only occurs in 26% of cases. Also, as all we know, the standards have been reviewed and amended that also introduce a lot of complexity and novelty into the process. A second challenge we see is that the MENA region is facing a number of geopolitical threats. This, coupled with some existing vulnerabilities, have led to increased ML and FT risks. As a result, the banks are expected to invest a lot more in compliance to mitigate those risks. Undeniably, the private sector has been incurring considerable cost in complying with the standards and in mitigating the risks. Increased costs are mostly related to transaction monitoring, and in particular the use of screening software, customer due diligence reviews, and also recruitment of skilled professionals. I think we have also suffered from the shortage in the market for AML CFT professionals. And even from our perspective, we're trying to recruiting people, and it's very difficult to not only recruit but also retain skillful staff. But it is quite important not to lose sight of the considerable benefits that an effective and efficient AML safety regime can bring along. The effective internal controls that banks will put in place will protect them from potential reputational, legal, and operational risks. And also knowing customers allows better marketing of your products and targeted services, which eventually leads to higher profitability for the banks. We are aware of the risks of over-regulation. We have heard of this term, quite a lot recently. And in this regard, we have endorsed the risk-based approach to the implementation of AML safety regime. We think the risk-based approach, if properly implemented, really holds promises to establish a proper balance between necessary regulation and also at the same time financial growth, inclusion, and development. Right now, most countries are still in the early stage of implementing the risk-based approach. So we need to give a little bit of time to countries to gain experience, and also to regulators to gain experience on how to really apply this risk-based approach. The concept of the integrated approach of risk and compliance is really not new. We're all aware of it. But the recent amendments to the FATF standard and also the increasing geopolitical and MLFT risks have given it a renewed impetus. More than ever, the boards of directors and senior management need to understand the overall risks and also the exposure of your respective institutions, and receive clear and consistent information so as to allow you to act in a timely and appropriate manner. So every major change brings with it new challenges and uncertainties, and we all know that. But it also brings new opportunities. With the right level of commitment and through the dialogue with standard setters and also the regulators, through the use of appropriate tools and processes, and by the integration of efficient internal controls across organizations, we're confident that banks will be well placed to mitigate the risks you are facing and also to continue to thrive in this new environment. Thank you.